Good morning, this is Ron Brown. It's Wednesday, May 15th, 2024. I'm going to create another video for this video series that I'm doing on order flow and context, where we're going to combine order flow and chart analysis with HGS Investor. Now I'm going to move on to the second slide, and any stocks, index, or ETF mentioned in this presentation is not a recommendation to buy or sell all trading strategies or use at your own risk. Now, in the first video, I told you to download the PDF at this location. If you've downloaded it, I want you to download it again because I modified the PDF and kind of rearranged it, and I'll show you here in a few minutes what I did. So it's www.hgsinvestor.com/context charts, all one word, .pdf. Before I go any further, I want to point out that in these videos I've been incorporating a lot of techniques that I learned from a trader named Frank Bunn. A lot of you probably already have these videos, but if you don't, they're on sale right now, and I'm going to suggest two of them that I think are the best. And I'll just suggest this one, Mastering Price Charts. A lot of what I'm going to be talking about is based upon this set of videos. Normally it's $60, on sale for the next 8 days for $9.99. Another one you may want to start with, it depends on how much you know about charts and chart reading, is Investing and Trading for Beginners, Mastering Price Charts. Now, he'll refer to this in this video occasionally, but those two I recommend, and you can see 5 stars on this out of 389 people, 4.5 stars out of this out of 458. He's got a lot of students. Now, there is a wealth of information in these two videos, so for $20 plus tax, it's well worth spending the money, and you'll see how I tie in some of his techniques with HGS Investor, and they really complement each other. So just go to udemy.com, udemy.com, and do a search for Frank Bunn, and you'll locate these videos. Okay, I'm going to give you a little tour here of tools that I'm going to be using and what I'm going to discuss. This is the PDF. This is the updated PDF. We're going to talk about order flow and price mechanics, structure and direction, pivot trends, price action, trend changes, order flow and market sentiment, contraction, properties, price action, reversals, price level system. And then we're going to talk a lot about context and use context. And by context, by the contextual trends, I mean trends that are moving up relative to certain moving averages. And I use the same moving averages that Frank Bunn uses. I use EMAs. I use 3, 6, 18, 50, 100, and 200. And these are all things you're going to get very familiar with if you watch this video series. And then we're going to talk about risk, setup risk, intrinsic risk, and contextual risk. He doesn't mention volume, doesn't really use it, I don't believe, but as you know, if you believe in VPA, you have to use volume. So I'll be using volume techniques, of course, volume price analysis in this analysis and in this instruction. In fact, right here, this last sentence, we can combine Frank's techniques with VPA for greater insight, and I'm going to show you some charts over here, the charts that I'm going to be using. Now, these are the links to the PDF files that I mentioned in the first video. I just rearranged them and put them at the end of the PDF. So download the PDF again and make sure that you're using this one, because what I'm going to do is I'm going to teach from this window here and show examples over here on this side. Now I'm going to take you through the charts that I am including. And as I mentioned in the first video, if you're an HGSI Insider Club member, which is my files essentially and my research, everything I'm going to be using is under context charts. And I'll just run through these very quickly. This right here is a daily chart, no VPA. It's just a plain chart. I'm going to be using that when I talk about structure and direction and price action trend changes and so on. We'll be using just a plain chart. This one is the same chart, but it adds VPA flags to the chart. So you can see how visually we can see signals on a chart that VPA is giving. Now, all the signals are not good. We know that. But we're going to talk about VPA in terms of context and how they can give us insight into what's going on rather than just looking at a plain chart. The next chart, I'm going to add some context to it. By context, I mean the moving averages and the industry and the strength compared to the industry. This stock here, Charles Schwab, the industry is blue, and the industry is wealth management, and the green shows that Schwab is actually underperforming the industry. Yesterday it outperformed. Today it's actually performing with because it's flat. So the group must be going up because Schwab is going up. Well, all you have to do is look over here and see that the percentage price change today is nearly 1%. So this is what I consider my first context chart. It also has the intraday information here. I just added this window this morning, so when you download your add-on again, it's going to be in there. But you can see the 3 and the 6 and the 18. That information is right here where there's a 3-6 crossover on this particular chart. Then there's volume and pocket pivot volume, the blue and rose lines, and then volume point of control. So there's a lot of context in here compared to this plain chart. I'm going to go on down to number 4, and this is context also with the group comparison, but not only do I have the 3, 6, and the 18, but I have the 50, the 100, and the 200-day exponential moving averages. So it's easy to see if a stock is in a strong uptrend or where it is relative to its moving averages. Now I'm going to go back up to the 3-6 and notice that on the histogram, the only histogram I have in here, and I moved it up above volume, is the 3-6. That's so I can expand it and really see where the crossovers occurred. Now the other charts have the 3-6 crossover, the 618, and the 1850. Now Frank Bunn uses MACD, and he changes the MACD according to whichever moving averages he's using. When I put these charts together, and it's been several years now, I decided I wanted to see everything in a single chart. So I can see the 3 versus the 6 here, 6 versus 18, and the 18 versus 50. And if you look over here, these are all identified. I'll bring this down and get an arrow. The 3-6 is a micro trend. The short-term trend is 6 and 18. And the expansion contraction is the 18 versus 50. And then in the strong charts, or the stocks with the all of the moving, or the charts with all the moving average, we can see the fan, how it's spread out. This shows a very strong stock when the fan is spread out like this with the 200, the 100, the 50, and the 18, and there is space between them. In addition, I have the volume point of control. You can see on this black bar right here, it dipped down, and it actually the 3 went below the 6 too, but it recovered the next day. It found support at the 18-day exponential moving average. Another thing on this chart, if you look over here, you can see where the price is, and this is the end of day information. It doesn't update intraday on this, but the percent closed to the 3, 6, 18, 50, 100, and 200, and the percent volume. This is yesterday's information. It tells me the EMA trend is up. The relative strength is 87. The Kirkpatrick RS is 90, and when the earnings are due. So I'll clear this out. Let's go down to the next one. Same chart, except I've eliminated the box over here with that information, and I've now included the VPA flags. All the other information is identical. Okay, the next chart is a daily chart, and this has the support and resistance lines which is based upon percentage moves within the chart. And you can see that there are no resistance lines are drawn in here yet because there's really no resistance here. But if you edit the indicator and look at support and resistance, I'm using 4 lines. That'll be 4 lines above and below if they are above and below. Otherwise, it's 8 lines, and the sensitivity is 2%. So when there is a 2% change in the stock, the direction of the stock, based upon the zigzag indicator, a new trend line or support or resistance line will be drawn. But you can see that here's McDonald's Corporation. I just clicked on it. You can see the support lines are in blue. Resistance lines are in red. There's a total of 8 lines here. So quickly, what's the context of McDonald's? I'll just grab this one. You can see that the fan is down. I want to go up to the next one here. You can see the relationship of the price to the moving averages here. As of yesterday, not counting today, the stock was trading below all the moving averages. So what we have here is maybe a counter trend rally, but because the fan is so weak, I am not optimistic about this turning into a long-term trend to the upside. You never know, but as of now, if you look over here, you can see that the fan is down. Everything is stacked. They're close together, but still they're stacked in the correct order. Let me clear this out of here. And there's the 200, the 100, the 50, and the 18. So the fan is in a downtrend. It isn't as severe as far as the width here. You can see that it's coming together, and you can also see that it's coming together based upon the histogram. Look at the green bars here. Went from red to green as the lines come together. Okay, that is just a quick example of what you can see with context, and all these are going to be explained as I go through these videos. And if you look at the Frank Bunn videos, you'll get an idea of how he does it. But there's much more information here rather than just looking at a plain chart. And the other charts I have in here are weeklies, candlesticks, VPA flags, and the RS compared to the S&P. You can see McDonald's has been underperforming massively. And then here's just a plain chart. And I'll be using this for the structure and direction, pivot trends, things like that, where we're just looking for non-contextual charts or charts without moving averages. Okay, now I'm just going to select, actually I want this one right here, context, no VPAs, and I'm going to show you in the warehouse what I've done and what you can get out of these. Now under folder number 11, context, micro, short, intermediate, and long trends. What I've done is I went in and created these filters which instantly pull up stocks based upon their context. So the first one is, and I'm in this folder right here. I'm just going to use it. It's options, most active charts. These are this is a group of stocks I get from bar chart, ETFs, and stocks. And these stocks are in the micro trend up intraday. I have both end of day and intraday. I primarily just use the intraday because I don't do much at night. Everything I do is pretty much in the day. But I will go through and look at stocks early in the morning for potential setups. But once the market opens, all that information is right here. Now here is a stock. It's $1.49. I'm not going to look at it. Here's Carnival Corporation. We all know this stock. It's in the cruise line industry. So you can see that microtrend is up, so that means the 3 is above the 6. If you look down these columns, you'll see that the 3 went above the 6 2 days ago. 0 is a crossover day. The VPOC went over 4 days ago, crossed over. The relative strength is 73. The Kirkpatrick relative strength, which requires a very strong stock over multiple weeks to be above the 26, or I'm sorry, it's based upon a 26-week moving average, is only 8. So I can immediately tell that this stock is not doing all that well, but it is showing up on the micro trend up. It's up 3.13% today, trading at almost 91% of its daily range and volumes above average. The 90-day moving average is 30 million shares, so it's doing quite well as far as liquidity. There's no VPA signal, but yesterday or the day before, I can see there is a strength seen returning. So let's bring this up and make it full screen. I'll actually drop down to the one with VPA so we can see that strength seen returning. Now looking at this, you can see that the 3 is above the 6. It's hard to see it here. That's where these histograms come in real handy. You can see it turned positive here. There's a slight green dot here, another one here, and then today it's moved up more. This is why I have this 3-6-18 context chart in here, so I can just pull this up and I can quickly see if there's a crossover here on the histogram. This is the only chart that's like this. The other charts just have these windows for the histograms. And they are adjustable to a certain point. You can pull them up and down. But I just find it easier to flip over to that chart with the 3-6 when I'm looking at these contextual charts where the minor trend is up. So getting back to this, you can see that the 3-6 is positive. This is a micro trend. 3-6 only. The 6 and the 18 have not crossed, and the 1850 have not crossed, but we do have a positive volume point of control. You can also see that the projected volume today is above the moving average. So if we just happen to get into this stock on the original cross, that would be right there. You can see it's very hard to see on here, but the 3-6 chart really shows it. The 6 is above the 3 here on this first white candle, so the crossover is here. Now, I know some of you like to buy these stocks that are in a downtrend. Clearly in a downtrend. If you look over here, you can see neither of the fans are in effect. So what it's doing, it's consolidating, and it is actually outperforming its group. The group is the blue line. The green is the comparison of this stock, Carnival, to the group. 1 day change, 0.74. Look at this, the group ranks only 21. So there is some money coming in to this group because it's up today. The problem with a stock like this is it's got a lot of overhead resistance, but working in its favor is that it's starting to go up. The group is flat, but this is outperforming, so you have to take all that into consideration. But remember, you're neither in an uptrend or a downtrend when it comes to the fan. You may just get a short move out of this, and then it may go no further. Okay, I'm going to clear everything off of here. Close this up. And that's an example of a stock where the micro trend is up, and you can look down the column here and find the stocks that are freshest. But let's take a look at Salesforce before I leave here. This happened 7 days ago, the crossover, and the other crossovers, the 6 and 18 and 1850, have not yet happened, so it must be moving up slowly. Let's take a look at it. Make it full screen. You can see it's starting to move out of its base today. Bring the arrow back up. Here's the 3-6 crossover, clear back here, and you can see the 618 has not crossed yet, nor has the 1850, but the volume pointing control has crossed. Volume is light on this, below the average. Here's the earnings back here, out of the way, but it looks like it's starting to move up. How's it doing compared to its group? It's up a little bit today, and the group is moving up. It's in application software, a large group. You can see there's 228 stocks in there, but the industry's up 1.56% today. So the market's moving up, the industry is moving up, and it's breaking out of its base. Now this is based for quite some time. You can see that. If it gets past here, it's got a good chance to move higher. This may be a good opportunity to buy a longer term debit spread, month and a half. If it moves up, you can make a pretty decent profit. Okay, I'm going to clear all this out. And let's move on down. So this is the micro trend. I'm going to go to the short-term trend. What the short-term trend finds are stocks where both the 3 and 6 have crossed over and the 6 and 18 have crossed over. So let's bring up Blackstone. You'll see what I mean. I'll make this full screen. Bring the arrow up. Let's just start at the top on this. This is private equity. The group's moving up, and this stock is outperforming the group. Now, where was the 3-6 crossover? It happened back here, and the 6 and 18 crossed over here. Notice the 1850 has not crossed over yet. So this is an example of a contextual chart which has crossed both of these moving averages. So you can see that there is some momentum that is built on this stock. Still got resistance overhead, no question about it, but it's made a nice move up, and the VPOC happened here after. It actually happened here, and then there was a pullback for one day, and then it fired again. Now, if you look up here, you can see these moving averages are a mess. They're really bunched up here, well above the 200-day moving average, though, and above the 100 now. But not a real strong stock, but it's beginning to move. Okay, I'm going to minimize this. I have to get rid of this. And let's move on from the short-term trend to the intermediate trend. So the intermediate trend, what is that? It means that all of the moving averages have crossed over. Let's take a look here. Here's a $76 stock. This is a beautiful chart. And I'm going to point out here that the 3 and 6 crossed a long time ago. The 6 and 18 have been positive since back here. The 18 and 50 have been positive since back here. VPOC positive here and here. So this was a stock in a downtrend. Here's a low pivot here, and the 3 crossed the 6. Originally here there was a pullback on this group of candles here, and then it fired again, and look at all these pocket pivot. These are all considered part of the context. Now look at the group, and it is trading. It is actually outperforming the group. This is NextEra Energy. Now notice that the fan is not, well, it's updating right now, not quite in place here. Here's the 100. It has to get above the 200 before the fan is in place. We have all this strength here. The 3 is clearly above the 6, and here's the 18, here's the 50, here's the 200 and the 100. Now, after today, that may be above the 200. If not, it'll be within the next few days. But notice over here that there is no fan uptrend or downtrend. I find it very helpful to be able to look at these histograms here rather than looking at an MACD, which just shows the crossovers and you have to change them every time. This is much more useful because you can also see the momentum as these get higher on the 3-6. It shows that the momentum is increasing on the stock, and that goes for the other moving averages and the crossovers, or the histograms, I should say. When the move is strong, these are going to be building. When they're weak, they're going the other direction. Okay, so that is that scan. And then finally, the intermediate trends are all up, or I mean all the trends are up, but the fan is also up. So here's Dell Technologies. And you can see that Dell, I'll bring that arrow back up, 200, 150, 18, 3, and the 6. There's a pullback here, and then it crossed over again to the upside right here after this 2-day pullback, and it was a buy signal then. in a very strong stock. Here the group is moving up. This is outperforming the group today as it gapped up. It's participating in this run. I want you to notice how long these have been positive down here. The 6 and the 18 and the 1850. The 1850 has been positive for a long time. We've had a few pullbacks on the 618, but this fan has been in place from, well, this point back here. These stocks, when they start trending like this, yes, they're going to have pullbacks. On this gap up, it pulled back. This was excessive, of course. Where to find support at the 18, and the 3.6 crossed down, of course, but then it crossed back up again. Just because a stock pulls back does not mean that the long-term trend is interrupted or changes. On this pullback here, notice that the trend remained in place. Now this video is getting a little bit long. I want to show you that we have just the exact opposite on the trending down. Everything is in here, and I'm going to apply this fan to these stocks. And here's a familiar name, Nike. So I immediately know that Nike is in a downtrend with the fan down, and intraday it is down again. It's extremely weak right now. But just by flipping through these trends, the scans, I know immediately what the context of a stock is. I'm not going to take the time to go through these because we're going to be doing, or I'm going to be doing that in many of the upcoming videos. It's going to take some time to get through here, but I just wanted to give you an overview of what I plan on doing. I'll try to get at least one video out per week, and maybe I'll get a couple out, and we'll do some prospecting in real time at the time of my recording anyway. And then I do want to have an online live session here in a few weeks. If you're not an HGS member, if you want to use my files, you need to subscribe, and you'll get a free membership for 30 days. And you'll get my files for the time period that you're a member, and you can try all of this out. Thank you for listening, and have a good rest of the week.